Hello, everyone. So I quickly wanted to talk about what the stock market is, how does it work, and why is a stock price going up or going down, and kind of how it came to be. So the stock market is simply a way for a company to go public and give the public the opportunity to invest in that company and own it via a share. So if a company's private, it's not listed on the stock market. When a company goes public, they do an initial public offering or an IPO. So an IPO is that company's first, day on the stock market. First day as a public company. They go from being private, where all of their books and a lot of their financials aren't public information, to going public. And what I've seen, is that initially, when the stock price is set at the IPO, it's set by investment bankers oftentimes, and it's set here. And what I've seen is the stock will, this is just a pattern I've noticed, will go up and then go down, and it'll go down below the initial IPO quite often. They try to set it high, and that's to kind of raise money, because what happens when you buy a stock is your money goes into that company. And not to get into the nuts and bolts of where your money actually goes and the brokers and all of this kind of thing. But now you've kind of got free trading, which allows you to take $100 and, buy $100 worth of a company's stock. Or if the stock is a $3,000 stock, like Amazon is currently in 2021, you could buy a fraction of a share at some sites on some brokerages. But usually you would have to have the $3,000 to buy one share of Amazon. So companies are valued based on, they can often, one of the things that was confusing to me when I first got into stock trading was, why is this company's stock $5 a share and why is this company's $3,000 a share? Well, often it's the value of the company makes the share price go way up, but companies can also split, as Tesla and Apple recently did, where, let's say, if their shares are exactly $1,000, they do a 4-to-1 split. Now each share is $250. There are now 4 times as many shares. And I don't know if I'm quite getting the nomenclature right, because there's all kinds of terms that are stock specific, but the number of shares and the value of a share, all totaled, multiplied by each other, I believe, is the market cap, the total value of the company. So as a company's stock price goes up because more people want those shares, the company's value goes up, its market cap. So the price of a share can, go up long term or go down, and it kind of always does this. It follows these graphs that go up and down, and that's just as people are trading it. I have one share, I can say I only want to sell this share for this price, and if no one wants to pay that price, let's say the current stock price is exactly $100. I say I want to sell this share for $101, and when someone will give that on the market, my share will sell to them. And so now they bought it at 101. So if it goes back down, they lost $2. If it goes up, they make a couple dollars. So that's how the stock market works. And what I think is beautiful about it is that the stock price of any given company is literally what people think that company is worth, or do people believe in that company? So I've always tried to put a lot of my investment money behind companies I believe in, companies that I think are doing good work, that are working towards a future I want to see. I invest a lot in technology. So I try not to invest in companies, that are kind of past their prime or failing. Even if the stock price is good, a lot of people invest just based on numbers. What are the price and earnings of that company? And how they relate, the PE ratio and all of these fancy analytics. And you can do that, and that works for a lot of people. But as many of you have probably heard, picking stocks, you would do just as well if you had a random way to pick stocks. And sometimes that's true. So oftentimes I choose to invest based on what I see people thinking or talking about, or if I see kind of, wow, a lot of people seem to be interested in this new company. That might be a company I want to look at investing in, because I think the stock price will go up. And we've seen that happen over the last few years with Tesla. Specific stockbrokers and analysts didn't really recommend it because they thought it was already overvalued, yet people continued to want to buy the stock and the price went up. And that's just really what the stock market is. It's kind of an analysis of a company based on investors and really, really smart people who look at all the numbers, and just the general public and what they think about that company, how much they want to buy their products or use their services. So as you see stock prices go up and down, don't get too caught up in how that all works. If you're a new investor or someone who just invests on the side, again, I try to keep up with everything and read a lot, but I try to also just invest with my heart and make sure that that's set with something that's logical. If I can justify my reasoning of why I'm investing in this company, or why I think the stock is a good buy right now, buy low, sell high. That's literally the oldest adage about the stock market and how you should invest, and it's true. So in the next video, I'll get into exactly my strategy for investing. Last year or 2 years ago, I developed something concrete with rules that I'll share for free, and because I've evolved it a little bit since then, and I'll share that as we get going too. And I really believe that my investing strategy, if you do it right in the long term, it doesn't lose. It's been shown in the market that if you put money in for a certain number of years, it'll do well. You'll make money. And I love these apps because I currently use Webull because they don't take a fee for allowing you to trade and put your money in, whereas previously you had to pay a lot of fees. And if you're someone who's more professional, maybe those fees are worth it to get higher on the list of trading. Let's say I put in a trade, someone else's trade can be a microsecond faster because they pay to have that service done quicker. But it's not that important. I tend to invest long term. I'll make some trades short term. And you saw a lot of craziness this past week in the stock market. And I know a lot of people are new and have no idea what they're doing. So again, buy low, sell high. And the stock market is literally what people think and believe in a company. When people are talking about companies, new companies or new technologies, new things that are coming out, new products, and you see these lines at the stores around Christmas time, what's the newest toy and who makes it, right? Is Nintendo making a really great product and they're releasing it in November? Might be a good time to buy Nintendo because they're going to make a lot of money around Christmas time. So these are the ways that I've invested, and I look forward to sharing more of that with you soon.